What up, everyone? How's it going? Today I'm going to talk about a topic that I know I've covered previously, but here I'm going to dive deeper into it. And furthermore, I'm going to talk about why I am positioning this way, but also why I think many of us should really think about, hey, what's happening right now in the economy? Are things looking good? Are things looking bad? Neutral? What are your thoughts? And sometimes we just need to talk through it. So I personally believe Bitcoin is one of the best assets in the world. I think it will outperform most assets in the long run. Now, that's not to say there's not going to be a biotech stock that solves some disease or some AI stock that is the future of AI. What I'm saying is, I think that there are certain companies right now that are completely overvalued, but Bitcoin, on the other hand, I think is in a decent position. It's holding a relatively good footing between 50, 55, 60K. And I can see it in a deep, dark recession, maybe dipping below that, but who knows, right? I mean, it's over long periods of time, it tends to outperform. So with this, I'm going to talk about the Bass Pro Shop CEO. He recently issued a warning that the company needs to reassess its strategy. Now, guys, let's think about what Bass Pro Shops is. There's kayaks, there's tents, there's a lot of outdoor equipments, pontoons, little rifles, hiking gear, just like outdoor discretionary stuff, right? And they also sell boats, they sell rafts, I mean, you name it. Now, they're trying to get a lot of their consumers on the credit card or on the buy now, pay later program. And first of all, guys, again, I'm no financial advisor, but buy now, pay later on consumer discretionary products, that's not a good idea because these things don't actually, yes, they add value in terms of fun and good times, but at the end of the day, this doesn't put food on the table. And you don't want to put this kind of stuff on a buy now, pay later program. You want to make sure if you can afford it, you pay it cash, right? And so I think what's happening now is people are not coming into the store as much. Maybe they're seeing less foot traffic. They're seeing less people buy certain items. You know, the summer's right now, guys. The summer is here. And it's kind of scary to see the Bass Pro Shop CEO say, hey, there's weakened demand. We're not seeing a lot of foot traffic, not seeing a lot of volume. We're not seeing a lot of purchases. Because what that signals is consumer discretionary is down. Now, let's be real here. I heard it today at my work. I know a lot of people do at their work right now. If you can talk to any interest rate sensitive company, they will say the same. But we are starting to see a slowdown trend in the economy right now. You can talk to any business. You can go to layoffs.fyi, but you're starting to see a slowdown trend. And with this slowdown trend, what we're actually going to see, from my view at least, is maybe a continual slowdown until maybe something breaks, or we may see it just slow down for the remainder for a good part of the year, and then it'll bounce back up. But this is pretty scary because when the economy slows down, people spend less money. When people spend less money, it's kind of like this scenario where things just slowly devolve, right? And when things slowly devolve or slowly go down, then people are not spending any money. People tighten their belts. No, people aren't eating out as much. And then guess what? Jobs get eliminated, right? If we see a slowdown in spending, we see a slowdown in job growth and jobs, and then eventually we see layoffs. So with this downtrend, I think we're seeing a lot of this contribute because Americans are completely maxed out on their credit card debt. Specifically, they're defaulting on their auto and their credit card loans. I put a podcast not too long on this. I did a few of these. But essentially, with this, we're actually seeing the consumer stretch so thin that they can't even buy discretionary or recreational items, right? I wouldn't be surprised right now if Dick's Sporting Goods was facing hard times as well. So I think with this, we need to really ask ourselves, okay, where are we positioned, right? With all these consumer sensitives, they're starting to see a setback, right? And this can be pretty much anything that is recreational, right? Anything that debt is used to finance. Think about the things that debt is used to finance. ATVs, right? People take out debt for the ATVs. Snowmobiles, RVs, fishing poles, kayaks, boats, pontoons, jet skis, tennis rackets. I mean, the list goes on what is a consumer sensitive. And most of those things actually people finance. And if you need to use debt to finance something or debt to pay for something, it's probably a sign that you can't afford it. But more importantly, if these companies are realizing that, wait a second, we're not seeing as many people take out these loans, I think interest rates for many Americans are too high right now. But the craziest thing is this. Interest rates are too high right now, but why is inflation still going up? You don't need to be, you can just go to the grocery store and see it yourself. Inflation is still booming upwards, right? So if inflation is booming upwards and interest rates are already too high for most Americans, what's going to happen? You either need to increase rates higher, which will cause a big crash in the economy, or you need to keep them where they're at for a very long time and hope that the consumer eventually gets tapped out. But a move not to make right now is to lower interest rates, because if you lower interest rates, then we're going to see the dollar devalue even further, and we're going to start to see things collapse. So I think this Bass Pro Shops thing is indicative of consumer discretionaries. They are the embodiment of consumer discretionaries, guys. And I'm hopeful, though, that we start to see more people kind of realize, wait a second, why are they laying off people at Bass Pro Shops, right? Why are they laying off people at Dick's Sporting Goods? Aren't these relatively healthy companies? The next thing that we've been seeing really go down is fast food in restaurants. Look at McDonald's. There's certain places in the region where Big Macs are 16, 17 bucks. Look at Whataburger. It costs 30 bucks for a full meal there. It's a fast food restaurant, guys, 30 bucks. Look at pretty much any fast food restaurant right now, and they're either shrinking their food portions and quantities, or they're just having to increase it and see less foot traffic. So fast food restaurants are also a sign. If you see these go down, it's also a sign that the economy is not doing as well. Now, the thing is this. We know necessities are strong. Look at housing. In many areas, too, where the market tends to be more, I guess you can say tight, like Arizona, we see it going down a little bit, but not that much. We're seeing other companies that really produce products that people need, like the waste management business is doing great right now. You're seeing Walmart, Amazon, you're seeing AI. All these things, they're really booming. So in 2024, what's my outlook? How am I positioning to optimize myself and my future? Well, the way I'm looking at it is I would like to primarily position myself towards Bitcoin. And obviously, I don't judge those who want to get this in their portfolio. I have a small amount, nothing big, but gold and silver as well. Gold and silver as well is better than fiat, right? But I think Bitcoin is positioned to outperform in the next couple of years. Yes, it could go down if we go into a recession. It is an omen on the positive and the negative signs of the economy. So it's not that it's going to be insulated through this. It literally, if it senses a recession, it'll take a big dip, right? That's just how it is. It knows things before others. It's the purest of the pure free markets. There's no surge protectors with Bitcoin. So gold, silver, and most importantly, Bitcoin and Bitcoin-tied companies, these are how I would like to position myself. I'm not saying other people should do that. It's how I'm looking at things. And things have been okay. I'm not going to say, if I would have put stuff in NVIDIA, of course, I would have outperformed. But I'm just saying that these things have been doing pretty well. And election year. We have to remember, we're in an election year, guys. Things tend to be propped up artificially. Guess what? Biden released more gas from the Strategic Petroleum Reserve. Think about that for a second. Isn't that a big conflict of interest? He releases gas from the Strategic Petroleum Reserve. It decreases gas prices. Well, guess what? What happens if we face an emergency down the road? How are we going to withdraw gas if it's all out, right? And I think we're going to see a lot of easy money, a lot of propping up of the economy, because guess what? He wants to get reelected. And if baby boomers' portfolios are down 20, 30, 40%, who are they going to blame? It's been too long since they had Trump in office. They're going to have to go and blame Biden, honestly. So he's going to do everything he can to cover up all the blemishes and mistakes of his 4-year tenure. I don't know. I think most Americans at this point can see through it, and I hope they do. But I think it's important that each of us look at our strategy and we stay consistent with it. We don't try to chase greed. We don't get envious. We stay focused, right? And we work hard. In a recession, it's not fun. I've been laid off in the past couple of years, and it was not a fun experience. But at the end of the day, we have assets that can help protect us. We have strategies that we can optimize our lives with. And furthermore, we can read the tea leaves like we're doing right now. We're reading the tea leaves, and we can see certain things are starting to weaken. McDonald's stock. You can look at Starbucks stock. You can look at all these discretionaries. They're starting to weaken. And what do you do when things start to weaken? You prepare, you get ready, because this is the time where you can make a ton of money. Anyways, guys, I hope you all enjoyed this one. Please be sure to comment, rate, like, subscribe, stream those sats, do what you can. You guys mean the world, and I'll catch you in the next one.